This year has seen more than its fair share of unexpected market collapses due to surprising news about poorly run cryptocurrency businesses. The fourth largest cryptocurrency exchange in the world, FTX, regarded as an industry mainstay until early November, is the source of the most recent seismic shock. According to a company announcement published on Twitter on November 11th, FTX, its sister company Alameda Research, and 130 other businesses operating under the name FTX Group filed for bankruptcy after experiencing a liquidity crisis. Sam Bankman-Fried, CEO of FTX, will resign from his position and be succeeded by John J. Ray III. According to the announcement, Bankman-Fried will assist with the changeover, though. According to Ray, the new FTX CEO, Chapter 11's immediate relief is appropriate to provide the FTX Group the chance to examine its circumstances and devise a mechanism to optimize recovery for stakeholders. FTX bankruptcy saga. For FTX and Bankman-Fried, a turbulent week ended with the bankruptcy filing. FTT, the native token of FTX decimated in a massive sell-off, is at the center of the problem. After a surge of withdrawals threatened to bring FTX down, a short chain of events that mostly took place on Twitter, so FTX tried to sell a sizable portion of its operating company to rival Binance. However, when Binance provided its rescue strategy and acquisition, the firm withdrew. Only a day after providing FTX with a financial lifeline, Binance CEO Changpeng Zhao tweeted, "We have decided that we will not pursue the potential acquisition of FTX.com as a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged U.S. agency investigations." On November 10th, Bankman-Fried tweeted about Binance's recent actions. "At some time, I might have more to say about a certain sparring partner. However, Glass Holmes. So all I'll say for the time being is, well played. You won." The multi-billion-dollar cryptocurrency exchange fell bankrupt a few days after becoming the industry leader. What happened to FTX? A few months ago, FTX had a $32 billion market value. The MIT graduate, a self-made young billionaire whose crypto empire previously included FTX and investment company Alameda Research, is one of cryptocurrency's most well-known people. Alameda Research was created to serve as a liquidity source on FTX. When Bankman-Fried introduced FTX in 2019, he stated that Alameda's motivation was to see FTX succeed as much as possible. Until this point, FTX had avoided the liquidity crisis that afflicted cryptocurrencies in 2022 as a wave of contagion shook the market in the aftermath of stablecoin Terror's $60 billion collapse. Similar to how governments provided emergency funding to banks that were caught up in the devastation of the 2008 financial crisis, Bankman-Fried offered offers to crypto firms. Styled as a benevolent superhero with the initials SBF, Bankman-Alameda-Fried intervened as a lender of last resort to cryptocurrency companies like Voyager Digital and Celsius before going down and posing a severe threat to the whole crypto sector. The trouble started with FTX's native token, FTT. Ironically, FTX was founded on a similar house of cards as Terrost. Like many other exchanges, FTX featured FTT, a cryptocurrency token created to fund the exchange's numerous projects. Owners of FTT might stake the token to generate money from their holdings or use it to get discounts on FTX trading costs. It's a typical tactic. Binance, for instance, provides Binance Coin BNB and Binance USD, two native tokens BUSD. But because of how the token was utilized to sustain FTX, SBF's empire was overly vulnerable to FTT price fluctuations. This week's seismic shifts are connected to a CoinDesk article from November 2nd that questioned FTX's solvency. Alameda Research's balance sheet was loaded with FTT, according to CoinDesk. According to reports, unlocked FTT was the single largest asset on Alameda's $14.6 billion balance sheet as of June 30th. And a $2.16 billion stack of FTT collateral was the third most significant asset. This implied that Alameda and FTX were not independent companies, and thus left Alameda extremely vulnerable to FTT volatility. And there is a significant drawback of native tokens. These particular cryptocurrencies are largely unregulated and susceptible to market losses. FTT contagion moved fast. There were other whales with sizable FTT holdings besides Alameda Research. Due to a prior agreement with FTX, Binance had a sizable stake in FTT. In response to the CoinDesk article, Binance sold off its FTT holdings, which started the domino effect. On November 6th, Canadian-Chinese billionaire Zhao tweeted, Binance got around USD 2.1 billion equivalent in cash as part of Binance withdrawal from FTX stock last year BUSD and FTT. We have decided to liquidate any remaining FTT on our books in light of recent findings. The tweet sparked a rush on FTT and a withdrawal from FTX. FTT reached its price of $78 in September 2021 from a low point of about $24 until Zhao's controversial tweet on November 6th drove it down to its current trading price of about $3. FTT was offset by the token's falling value and the risk that holding it longer would result in a complete loss. FTT might lose all of its value in a matter of days, much like Terra Luna tokens did earlier this year, according to Josh Peck, CEO of TrueCode Capital. Zhao from Binance essentially kneecapped FTX, and his promise to save the struggling exchange on November 8th vanished in less than 36 hours. According to Bankman Fried, there were around $6 billion in net withdrawals from FTX 72 hours before Zhao's offer. However, once Binance backed out of the bailout agreement, the business halted all withdrawals and new client onboarding. The downfall of a billionaire. Bankman Fried is no longer a billionaire, but Zhao has a net worth of $16.4 billion and is among the world's wealthiest people. Bankman net Fried's worth fell by 94% to little under $991.5 million in a single day, making him disappear from the Bloomberg Billionaires Index overnight. It's a sobering moment for Bankman Fried, who rose to prominence as a cryptocurrency tycoon in a matter of years with earnings comparable to some of the most renowned investors in the world. Zhao has risen to the top of the crypto league this week. The future of FTX and Solana. The liquidity problem at FTX has ignited kerosene on the cryptocurrency market, which is now contagious as investors worry another shoe may drop. In the first week of November, Bitcoin BTC and Ethereum ETH have seen more than 20% declines. Leading cryptocurrencies in other categories are also declining. The most noteworthy of these is Solana Sol, which has Bankman Fried as a significant supporter. Sol had a staggering 51% decline during the first week of November. FTX is a significant investor in Sol tokens and might sell the assets to reduce losses, which is the basis for Solana's liquidations. However, it's unclear how much harm this may do to Solana, said Miles Brooks, CoinLedger's director of tax strategy. As FTX Alameda seeks a method to acquire money, Sol, a collateral asset, will probably be liquidated. Everyone believes that the FTX was too big to fail, but as Brooks puts it, no crypto business is immune to the instability in the crypto market.